Welcome back to the deep dive. Today, we're jumping into the really key world of cryptocurrency markets. We've got this fresh crypto market analysis report here dated September 18th, 2025, and it's packed. Lots of critical updates. So get ready to sharpen your understanding of digital assets because things are, well, they're pretty dynamic right now. Really interesting stuff happening.
Yeah, absolutely. I mean, what jumps out straight away from this report is that the crypto market is it's dealing with these two massive, often kind of opposing forces right now. So our mission for this deep dive is really to pull out the most important takeaways from this report. We want to help you understand not just what's going on, but why it actually matters, why it matters for your portfolio maybe, and just the wider financial world. It's complex. We'll break it down.
Okay, yeah, let's unpack that. So the report points to these two main drivers. First up, a pretty big move from the U.S. Securities and Exchange Commission, the SEC. What exactly did they do? Why is it such a big deal?
Right. So the SEC, they've approved common listing standards for crypto exchange-traded funds, ETFs. Now, that might sound a bit technical, but look, this is huge. It's basically designed to streamline the whole approval process for these kinds of products, which means, the hurdles, the red tape for getting new crypto ETFs listed, they just got a lot lower. And if you think bigger picture, this paves the way for maybe the first multi-crypto ETP exchange-traded product in the US. So not just Bitcoin or Ether, but like diversified baskets. The report's even suggesting this could lead to, over 100 new crypto ETFs in the next year? Just the next year alone. That's not a trickle. That's like potentially opening the floodgates for institutional money to come into crypto. It really shifts how traditional finance interacts with digital assets, moves it more mainstream.
Wow, 100 new ETFs. Yeah, that sounds like a seismic shift. Definitely injects a big dose of optimism, right? It sounds like a legal breakthrough that could really supercharge crypto access for traditional investors. But then, like you said, there's this counterforce. The second big headline, this was from the U.S. Federal Reserve. What came out of the Federal Open Market Committee, the FOMC, meeting on September 16th and 17th?
Okay, so the FOMC, they decided to keep interest rates unchanged, which, on the surface maybe sounds okay, neutral. And this was happening even though personal incomes were rising, unemployment was stable, things that usually point to a strong economy. But interestingly, consumer spending hasn't quite bounced back, so households still seem pretty cautious despite those good numbers. But the really crucial bit here, the thing that caught the market's attention, was the Fed's accompanying hawkish outlook. And that's not just a throwaway comment. It signals they're ready potentially to raise rates or to tighten things up more down the line to fight inflation. And this view, this hawkish stance, it already caused a noticeable reversal in money flowing into Bitcoin ETFs. So it creates this layer of uncertainty, caution across the market, and it's sort of offsetting some of that big ETF optimism we were talking about. Creates real tension, just shows. Even with big regulatory wins, the macro picture, the wider economy still pulls a lot of weight for risk assets. Crypto isn't totally separate.
Right. So this amazing regulatory news, potentially unlocking tons of institutional cash, hitting up against a Fed that's sounding pretty cautious on the economy. It really does sound like a tug of war for market sentiment. So how did the market react right away? Like in the first 24, 48 hours trying to figure this all out, what did we see with Bitcoin and Ethereum prices?
Well, in that immediate window, both Bitcoin and Ethereum saw, modest gains. Bitcoin was up, plus 0.84% to $117,175.97. And Ethereum gained a bit more, plus 1.62% to $4,574.59. So that initial ETF news probably fueled that little optimistic bounce, pushed prices up. But the report suggests those gains were sort of capped pretty quickly by that Fed outlook, that hawkishness. So yeah, we saw green, but if you're listening, you should probably expect some cautious trading, maybe volatility, but stuck in a range as traders wait for clearer signs. Or we could even see a bit of a pullback as the market really digests these two conflicting pieces of news. It's that classic good news versus bad news canceling each other out almost.
Makes sense. Beyond the big two, Bitcoin and Ether, what about altcoins? Which sectors are standing out positively or negatively when the market's processing news like this? Are we already seeing where institutions are looking?
Yeah, it's actually fascinating how you can already see institutional interest shaping specific altcoin areas. We're seeing strong attention moving towards real-world assets, RWA, and institutional DeFi. These are the areas really where traditional finance sees tangible value, bridges to things they already understand. So for example, you've got projects like Avalanche, AVX, making moves, launching a stablecoin backed by the Korean won, that's KRW1, that directly links crypto to fiat for practical stuff, compliant weigh in. And you also see big banks like DBS Bank working with Franklin Templeton and Ripple on tokenized fund solutions. I mean, these are real concrete examples of TradFi getting involved, integrating.
Yeah.
And that naturally boosts how people see the value of those projects, shows real world use, regulatory engagement. On the other hand, higher risk altcoins, maybe those with less obvious utility right now or weaker fundamentals, they might struggle a bit because when investors get cautious, like after that Fed news, money tends to flow towards quality, towards things that feel safer or have that institutional backing.
Okay, so the immediate reaction was optimism checked by caution, and institutions already favoring utility, like RWA and institutional DeFi. But what about the bigger picture? Looking out, say, weeks, months ahead, let's circle back to regulation first. That seems central to all this.
Oh, absolutely. This is a turning point, no doubt. Approving those common ETF standards, that's a massive step. It's bringing crypto more into the financial mainstream. Shows a level of maturity, that regulators are starting to accept and build on. And it's not just the US. This is likely going to push other regulators globally to think about similar moves. We've seen Australia easing up on stablecoins already. This SEC thing could be a catalyst for wider acceptance, maybe standardization, but it's complex. We also need to watch the harmonization efforts. Getting the SEC and the CFTC on the same page, there's a roundtable discussion planned for September 29th on just that. Harmonization is key, otherwise you risk projects just going wherever the rules are weakest. So the big question for you, the listener, is how will this evolve globally? Will we get a unified, stable framework or a messy patchwork of rules? Harmonization suggests a better path, which would be great for stability.
Yeah, that harmonization piece is definitely something to watch. And you mentioned TradFi getting more involved, influencing sectors like RWA and DeFi. How will that broader integration reshape DeFi and RWA over the sort of medium to long term?
Well, the report's pretty clear that TradFi joining the party will significantly boost institutional DeFi and RWA tokenization. But it's not just about more money. It's about changing the infrastructure, how risk is assessed, how things operate in crypto. As these traditional players come in, they bring their expectations. They need robust systems, things that meet their standards. So this means we'll need much more sophisticated risk management, compliance tools built within crypto. Think about proper KYCM for DeFi lending, really tough smart contract audits, reliable oracles for pricing, legal structures for tokenized assets. Basically, crypto has to kind of grow up in some ways, adopt the controls that TradFi uses. Now, that could make everything more secure, more appealing to more people, but it also creates this tension, right, with the original idea of permissionless, anonymous innovation. The challenge is bridging those worlds without losing what makes decentralization useful in the first place.
That's a really interesting tension, compliance versus decentralization. What about stablecoins? They've been a hot topic, especially with central banks looking closely. How do they fit into these longer trends?
Stablecoins look set for deeper integration, becoming less experimental, more like a core part of the financial plumbing. You see central banks like the ECB actively working on things like the digital euro. And they're also thinking about how central bank money could act as an anchor for stablecoins. This points towards a future where stablecoins aren't just off on their own, but woven into national, international money systems, maybe working alongside or even within CBDC frameworks. And it's a big but, this integration, it's definitely going to come with much tighter regulation. Central banks will want oversight, controls. It's a trade-off. More usefulness, more acceptance for stablecoins, but also more rules, maybe more competition for the private ones. It's more legitimacy, but also more centralization, potentially.
Okay, so we're navigating this space where old finance meets new tech, and the rule book is being written as we go. For everyone tracking the market, what are the absolutely critical things, the metrics we should be watching right now to get a real handle on these dynamics?
Right. The report flags a few key areas, really crucial ones. First, ETF flows. This is number one. Remember that reversal in Bitcoin ETF flows after the Fed statement. That's a direct, real-time gauge of institutional confidence. Watching those flows daily tells you if the market really believes in the long-term post-ETF approval. Are the institutions coming back strong, or are they hesitant, waiting for the macro picture to clear up? Net flows are key here, not just the total amount. Inflows versus outflows show conviction. Second, Bitcoin dominance. It's currently around, 53.95%. If that number goes up, it could mean new money is playing it safe, sticking with Bitcoin as the main entry point, especially with the new ETFs. That often happens when things feel uncertain. But if Bitcoin dominance goes down, that might signal investors are feeling more adventurous, exploring altcoins again, moving out on the risk curve, a risk-on sign. And third, central bank statements, especially from the ECB and the Fed. We heard ECB officials recently talking about financial stability, building trust. Any hint of more monetary tightening rate hikes, reducing balance sheets, or worries about systemic risk from either of these big players, That's almost certainly going to hit risk assets like crypto. These statements set the whole macro tone, often overpowering crypto-specific news. You really have to listen to the nuances in what they say about the future.
So given this tricky balancing act, this tug of war between the ETF hope and the Fed caution, what's a likely scenario for the market short term? And importantly, how should you, our listeners, think about managing risk right now?
Well, the market could easily get stuck in what's sometimes called a sideways accumulation phase. You've got the ETF optimism fighting the Fed caution. This push-pull could mean prices just bounce around in a range. Investors might buy the dips, accumulate positions slowly. For a really strong, decisive move up, we'd probably need to see those ETF flows turn positive again and stay positive, show real institutional belief winning out over macro fears. But if those worries about monetary policy get stronger, then yeah, we could definitely see a correction as people pull back from risk everywhere. So it feels like a time for careful positioning, patience maybe, not necessarily chasing quick gains. It's a test of conviction.
Right. Consolidation makes sense. So for our listeners trying to navigate this, what specific practical risk management tips does the report suggest?
Okay, for you listening, the report gives some solid pointers. First, diversification. Think about allocating maybe towards those sectors getting institutional eyeballs, especially RWA and institutional DeFi. They often have stronger fundamentals, clearer plans, better compliance, which might make them a bit more resilient. Second, keep a close eye on macro indicators. Stay plugged into interest rate news, inflation numbers, central bank talk. Like we've said, that's driving sentiment right now, often more than crypto news itself. Set alerts, read the summaries, understand what the economic data means, and finally, be careful with leverage. In a choppy, uncertain market like this, high leverage just magnifies everything wins and losses. The risk of getting liquidated goes way up. It's super important to really understand those risks, manage your position size carefully, and maybe use leverage very sparingly, if at all. Protect your capital when things are uncertain.
That's really solid advice. Okay, looking just ahead to tomorrow, September 19th, 2025. What specific events or data points should we be watching? What could give us clues about where the market's heading next?
All right, for tomorrow, 3 things really stand out. First, the full market reaction to that Fed statement. Watch closely how institutional players in the US and Europe really digest it. Look at trading volumes on the big exchanges and definitely keep watching those ETF flows. If inflows pick up and hold, that's a strong positive signal. Second, keep an ear out for any scheduled speeches from ECB and Fed officials. They might give more color, more detail on future policy. Any comments that clarify the Fed's hawkishness or the ECB's view on stability, that could easily move the market again. Listen for hints about their longer-term inflation and growth views. And third, on-chain data. Digging into data from platforms like Glassnode or CryptoQuant can give you insights you don't get from just price charts. You can see if the big holders, the whales, are buying or selling after these big news events. That can be a powerful, sometimes early indicator of where sentiment is really shifting and where prices might go next. It shows the actual movement of coins.
What an incredibly dynamic time for crypto. A huge regulatory step forward, crashing right into this cautious economic picture. It's created this really complex, but yeah, fascinating landscape. This whole tug of war is just reshaping things constantly. What stands out most to you from this deep dive? What's the key takeaway?
For me, this deep dive really just hammers home how interconnected crypto has become with, traditional finance and global economics. It's not some isolated niche anymore. It reacts instantly and profoundly to central bank moves, to regulatory shifts. And it leaves us with this big question, really, for everyone involved. How is this constant push and pull between regulators opening doors and the economy maybe slamming them shut? How is that ultimately going to reshape digital finance itself? Will it make it more stable, more mature, or will this tension create totally new problems for decentralization, for innovation? It's definitely something deep to think about as you navigate this space.
Absolutely. A lot to think about there. Okay, that's a wrap for this deep dive. Stay informed, stay curious, and we'll be back next time with more insights.